Thanks, Sheldon, Kathy. Thanks for having us here today. Certainly not just me, as you can tell, with Randy and Michelle and Bill, Frank, Stan, Wayne, and Jan, whose tireless efforts we really appreciate. She's a real treasure for us here at Coeur, Alaska. So, round of applause for Jan. Well, I was going to introduce myself, but that was already done, and I was going to introduce everybody from Coeur d'Alene Mines and Coeur, Alaska, and that's already been done. So I guess all I have to say is thank you for this opportunity to come here and say hello and give you an update on our company, and more importantly, Wayne will give you a good update on what all is going on out at the Kensington gold mine. We were just all out there yesterday, and man, there's a lot going on, and I won't steal Wayne's thunder, but it's exciting times out there. What's that? That's okay. You've got all the pictures. Just to give you a quick background on Coeur d'Alene Mines, for those of you who aren't familiar with us, thanks. We have next slide. We have 5 operations in 6 countries. We're traded on the New York Stock Exchange and on the Toronto Stock Exchange, and we're really on a roll. As Sheldon commented, we have a series of new mines that we've just brought online here the last few years. The last one of which is Kensington, which started up in 2010. We've gone through a little bit of a project intense phase here in the last few months, which Wayne will talk more about, but that really gives us now a new platform of operations that are now throwing off a lot of sales, a lot of cash flow for the company. We generated over $1 billion in sales company-wide last year of silver and gold, and almost $500 million in operating cash flow. You don't have to go back too far. I think in 2008 we had about $120 million in sales, and our operating cash flow that year was $14 million. So we've come a long way in a short period of time. Our big mantra as a company is producing and protecting shareholder value. And what does that mean? That means 2 things. We're a publicly traded company. We have an obligation to our shareholders to produce value, to generate returns for shareholders. But we can't do that, and we recognize that as a mining company, you can't do that if you don't protect the value of the company first. And that is really in 3 areas. That's in the safety, in the environmental, and in the community relations aspects of an operation and of a mining company. We put those things ahead of sales, ahead of cash flow, ahead of ounces produced, because if you don't produce them in an environmentally responsible way, in a safe fashion, it doesn't matter. And that's really what we're all about as a company. The sales, the cash flow, the production, that all comes as a product of getting those things right. And you won't go to any mine that shows that or demonstrates that commitment more than if you go out to Kensington. I was reminded of that again yesterday. I was so proud to see not only what Wayne is leading out there in terms of the real turnaround in efficiency and soon-to-be output of gold ounces, but the commitment to safety, the environmental stewardship, and then with Jan here in town leading the charge on the community front. Those are the things that I care about most as the Chief Executive Officer, and this is a shining example for our company, and I couldn't be prouder. Next slide. Just to give you a quick snapshot, background on our involvement and commitment to Southeast Alaska and the Kensington mine. This sounds weird, but this year will mark a quarter century of involvement in the Kensington project and now operation. That's a long time, I guess, and I've been around for 16 of those years, and it's obviously gone through a lot of permutations and fits and starts along the way. I think we're now finally really there. We've got the right kind of people, the right plan, and things seem to be moving now in the right direction. We've invested a lot of money in Kensington, almost $600 million. We now have, between employees and contractors, about 365 people working out there, a payroll of about $35 million. So we generate a lot of jobs and a lot of tax revenue for Juneau, and we're committed. Believe me, after 25 years, that's one heck of a commitment before we've really started to generate any return on that investment. And with Wayne's leadership, we're going to be here a long time, and $1,600 gold doesn't hurt. With that, I'm going to turn it over to the guy that's really making it happen, Wayne Zigarlick, and he's going to give you an overview of what all he has going on out there at the mine. Thanks.
Thank you, Mitch. What we're looking at here is just a summary of what we were able to accomplish last year. You can see the production profile through the first 4 quarters of operation, starting in 2010, and we were fairly steady through that period. 4th quarter last year, we fell down a little bit, and that's when we recognized that we had some infrastructure that really was not adequate to sustain production on a continuous basis. So we made a decision late last year to kind of slow production down a bit and focus on those tasks that we needed to get our infrastructure in place to be able to produce on a consistent, sustainable level. And that's essentially what we've been doing since about November of last year. You can see the production profile on the bottom, the projected production profile for 2012. The first half of the year is less than the second half of the year. So, Jan, why don't you go to the next slide? Sorry.
They can't hear you. It's on.
It's on?
Yeah.
Okay. Right here is a picture of the paste plant, and this is one of the essential components that we needed to proceed within the mine. We had mined a year and a half without a paste plant, which means we're creating voids and not having any. We're starting to run out of places to mine, and if you don't have the backfill mechanism in place, then it was creating problems for us. And this facility here is all underground. So what you're looking at is essentially a small little processing facility that's built completely underground. It's a pretty impressive structure, and we're just in the process of commissioning that now. We expect to have that commissioned this month. Go ahead, John. Here's another picture of that same facility. This is a picture of the expanded dorm facility that we constructed this winter. We moved into this facility in January. We started construction on this late last summer, early fall. This added capacity to our dorm capacity to almost 200 beds now, and has helped a lot with employee morale, obviously, and certainly our ability to retain employees. This is a picture of our new warehouse facility. This is fairly current. It's pretty much what it looks like. It still hasn't been commissioned. You can see that the building is complete, and the inside is there's not even any shelving or anything in there yet, but we expect to commission this facility in the next couple of months. This is our new administration building, and this is very current. We expect to complete the construction of this facility in May of this year. And that's just what we get to look at on a daily basis, well, on a good day. But the story with Kensington right now is really about consistent, sustainable production. That's what we're aiming for. We're trying to transition out of this phase of construction and getting our infrastructure in place and really trying to de-risk the property so that all of our systems work and we're able to be predictable and sustainable in the future. And we're very right on the cusp of that now. We feel like going forward, second half of the year, Kensington is going to be something that we can count on. Any questions? Good.
Could you tell me a little bit about what a paste plant is?
Sorry, yeah, a paste plant is basically it's a batch plant. We take the tailings, which is the material that comes out of the ore processing facility. So after we've taken out the gold, we're left with essentially ground up rock. We take that material, de-water it, we remove the water from it, pump it underground, and mix cement with it, and we use it as a concrete replacement, basically. So we're able to, wherever we've mined out ore, typically we have to fill it back up with something in order to make sure the mine doesn't fall in on us. So that's what paste plant is it's basically a batch plant.
I'm woefully stupid about mining. So you're digging out the ore, you crush the rock, you do all this at the facility?
Yes, we do. Yeah. So that all the mining takes place underground. So we're taking the ore from underground, hauling it to the surface, processing it, and sending it back underground, mixing it with cement, and placing it back underground.
Yes, can you tell me what your total workforce is, and then what percentage of that workforce lives in Alaska, and maybe what percentage of that workforce lives in the Southeast?
I can. Coeur has about 260 employees. We have about 360 employees at the mine now, between contractors and Coeur Alaska employees. I believe about 70% of those folks are Alaskans, and I think about 50% are Southeast Alaskans.
On that same line, you said that there's a new bunkhouse that can sleep up to 260. Is that for full-time? Do the miners go in and out and they just stay in the bunkhouse when they're out there, or is that permanent housing?
The bunkhouse, we have the option of commuting if you'd like. It's a long commute. It's 2 hours each way. So the bunkhouse facility, which is about 200 people, beds, is for full-time employees. So while they're at work, they sleep there, whether they're on a 4 days in, 3 days out schedule, if that's what they choose to do, or a 2 week on, 1 week off schedule. So I don't know if that answered your question or not.
This is for Mitch. In your opinion, what percent of the current price of gold is due to loose monetary policy by various sovereign governments?
I was told about you. What percent of the gold price? Well, let me take the liberty of asking you a question in a little bit different way. Investment demand, how much of the current gold price is due to investment demand, which is really driven by those dynamics? And I don't know if I can give you a precise percentage or a dollar per ounce, but today gold is at $1,650 an ounce. The investment demand each year, last year for gold, I think was somewhere around 70%. The rest being industrial demand. What we're seeing right now is these ETFs where holders that are investors that want some exposure to gold buy a share of ETF, which is backed by an ounce of gold, and that has been a huge driver for both silver and gold. We've also seen central banks who don't like holding as many U.S. dollars as they currently hold, seek to diversify their reserves, and doing so by buying gold. For years, if any of you recall, there was a lot of central bank sales of gold. That hasn't been the case now for close to a decade. They are a huge buyer right now of gold globally. Russia, China. So I'm kind of dancing around your question, I guess, but it's a big driver. I'd say if investor demand goes away, both silver and gold would be significantly lower than where they are today. But in order for that investor demand to go away, the U.S. has to clean up its deficit situation. Europe has to clean up its act, and I personally don't feel very confident in any of those things happening in the next decade or probably beyond. And that's really where the crux of the kind of bid-ask is for gold and silver these days. How'd I do?
Give us a percentage, make sure it gets in the newspaper.
Yeah, exactly. My thought exactly.
He didn't go to work.
Did you guys bring any samples for?
Wayne, did you leave those all in your car?
Can you, I assume you're still drilling for reserves. Do you have a projection of your mine life? And then I'd also heard that one time there was possible discussion of smelter or some form of southeast, and if that's still anywhere out on that, it's on the horizon.
Yeah, what was the second part?
The first part was the reserves, and then the other part, because I'd heard a rumor or something one time you were considering a smelter somewhere in southeast, and I just wondered if that was still part of your business plan.
Yeah, no plans on the smelter front. We'll continue to produce what's called a concentrate, the big bags that gets shipped out of on barge, and we'll go to a smelter in another location. Right now, one is in Germany and one is in China. That may change going forward, but that's kind of a customer for our product. In terms of mine life and drilling, I'll let Wayne handle that, but the current mine life is, I think, around 12 and a half, 13 years. There's about 1.3 million ounces of gold that we have in what we call the reserve category, which is a high level of confidence that in fact is there. And I think once we get back to a steady state production level, we'll produce about 125,000 ounces of gold a year. So you kind of do the math there. And as far as upside to that, I'll let Wayne talk about that. We covered that yesterday. It was pretty interesting.
Could I ask one more follow-up on that one? As far as the smelter goes, if you had access to inexpensive hydropower, would that allow you to reconsider smeltering and processing your ore here in Alaska and creating jobs here instead of in Germany?
It would not change. That's just not a piece of the business that we know how to do, would want to do, would want to get into. Alternative sources of power would be obviously very advantageous for us as we look at cost structure and ways to reduce costs out there right now. We're on generator power. Diesel is one of our biggest costs, and if there was an alternative source of power, we would we'd use it, and we'd use a lot of it.
Thank you.
Yeah, let Wayne talk about exploration.
We're doing a considerable amount of drilling this year. A lot of the drilling we're doing is to develop a firmer mine plan around what we already know. But we are going to do some exploration, and I think we're was it $7 million on drilling this year? I think. Yeah, that's right. $4 million on drilling this year.
Nice try, Wayne.
Yeah. The bulk of that is really centered around trying to fill in better knowledge of what we have. But we do believe that Kensington has outstanding exploration potential, and we've had certainly some good indications of that. So we'll continue to try and grow the resource as best we can. But right now we're focusing on primarily the next 3 to 4 to 5 years to make sure that we have a sustainable future, and then start focusing on growing the resource.
Are you going to make any collector coins from the Kensington?
That sounds like a question for Jan. That's certainly something we would consider.
Yeah. What kind of car do you drive?
It's not a Prius.
One of your slides showed a cost per ounce of $1,068. What will that be when you're at full production of 125,000 ounces per year?
That's a good question. We think that Kensington can be an $800 or $900 an ounce producer, and maybe more than that, depending on what sort of optimization things we can realize. We're really not in that phase yet. We're really looking to try and stabilize production, stabilize our workforce, stabilize all of our infrastructure, and then we're going to really start to focus on cost reductions. But from experience, I would say that $900, $800 an ounce is realistic.
Are there any other prospects in Southeast that Coeur is interested in or currently investigating? We've heard about the Eagle and Coeur Glacier possibilities or other mines?
We're not really focusing on anything outside of the Kensington footprint right now. I mean, I'm sure that Don Byrock and his group they've always got their ear to the ground and willing to explore anything that makes sense. But from my standpoint and my involvement, we're really focused on the area, close to the mine site.